Top Picks is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
Well, David's being consistent here, and he loves the consumer stocks in the developed countries. McDonald's, I mean, they're a global consumer name.
They're a global consumer name. Here's a giant ship that is slowly getting turned around and going in the right direction. Most recently, they reported same-store sales up 4% through their system in the last quarter. That was the strongest quarter since 2012. Once this starts to happen, it generally goes on for many quarters. They're trying lots of creative things in their stores. They've got their all-day breakfast, which is doing very, very well. They can roll that out internationally. The culture has become much more flexible, and they are trying a lot of new things in the stores. Food deflation is a big benefit to them. Low cost of goods going in is a big win for them.
Not in Canada. We're not getting food deflation.
Not in Canada,
around the world.
Certainly around the world. Increased minimum wage in 20 states is good for their customer base. They have a little bit more money to spend, and of course, low-priced gasoline doesn't hurt them. Stock has a great dividend. It's grown just about 9% a year over the last 5 years. The dividend, 3% yield. They bought back 5% of their stock last year, and they are highly unlikely to be hurt by weakness in China and emerging markets.
Yeah, yield of 3%. Yeah, I mean, they're experimenting with things like crayfish, apparently, in markets like Hong Kong.
They do some very creative things in local markets, and some of the things are coming out as a success. Some of the things don't work, but as an enterprise, they've got this thing going in the right direction. And when it gets a little momentum, it can go on for a long time, as we know.
I always remember when I was in there in Germany in the mid-'80s, they had beer in the McDonald's. I could not.
Now, why don't we have that here?
I know, it's just civilized, a civilized attitude to alcohol. You have a little glass of beer with your burger. I mean, society's not going to break down. Anyway, Microsoft.
Yeah, so we've talked about both of these stocks over the last year, and Microsoft is one that we own actually across almost all of our accounts. I talked earlier about what makes a new bull market, and it's after a stock trades sideways for many, many years and then ultimately makes a new high. And Microsoft topped out in 2000 and only recently made a new high going back over the last 15 years. Except, the earnings today are close to 4 times what they were in the year 2000. They have their dominant operating system for PCs. But we all talk about how well Amazon is doing with their cloud-based business. Well, Microsoft's Azure is a cloud-based enterprise business. That business grew 100% for them last year. It's a significant one, and they're converting enterprise clients toward that model. It allows their customers to turn on capacity and turn it off. Say if you're an internet retailer, turn on extra capacity for November, December, shut it down in January. Very compelling and cost saving. Their software, their desktop software, they're now selling, of course, as a subscription service. It makes it a much more predictable business, less a one-time sale and multiple month sale. Again,
and harder to pirate, I guess, as well.
Harder to pirate for sure. Again, 3% dividend yield, so 50% better than you're going to get in the 10-year bond. But they've grown that dividend just under 20% a year for the last 5 years. Again, slowdown in China is not going to impact this one. And so I want to buy companies that have strong balance sheets. They don't need to refinance themselves. They got lots of cash. I like companies that have growing earnings, recurring income, and this is one that fits in that camp. And it's trading better than 95% of the stocks in the U.S. over the last year.
We've only about 30 seconds, but cash is your favorite top holding, your third favorite.
We are in a correction, and how long a correction goes on for, I don't know. I know in the portfolios that we manage a number of funds. We have them hedged versus the market. So we've had virtually no impact so far in the year from the negative markets. And I don't know how long this is going to go on for. As an investor, I think it's a good time to have some cash that you can put to work when the market gets turned. And you want to build an inventory of companies that have behaved well through a tough market that you can have an opportunity to buy as markets get back on a better footing.
David, thanks so much.
Thanks for having me very much.
We're out of time on Market Call. Thank you so much for watching, and thanks so much to David Burrows for taking our viewer calls today. We'll be back tomorrow. Have a good afternoon in the markets.